Good evening, everybody. Oh, we will. How are we, boys? Everyone's rolling in. How's everyone? How's everyone's Sunday evening? How's everyone's weekends? How are we all? What's happening? I've just gone back from a nice meal, so I'm happy. Happy as you can be. What's happening? What's happening? Big Will. Everyone's just rolling in. There we go. We've got people coming in now. So that sound. Rightio then. Let's minimise the ebook. Let's start on the market news. So we're going to break it down. It's going to be a little bit raw, so I might not be paying so much attention to the chat. Might be a case of obviously getting locked in on the DD and stuff, going through it that way. So yeah, let's start it off. So evening, Lo. How you doing, mate? Start sharing the screen. Should have had this ready, really. Gonna go window, shut the entire window. I got all the tabs ready, as prepared as I could be. Oh, so how's everybody's? Went out for my sister's baby shower thing or something. I was just there for the food. So how are we, Beatrix? Leo's always about, isn't he? Yeah, making AI images, yeah. That's what we like. My cup's glass, by the way. Look at this. I'm all down for this cup. I'm all down for it. Right, so anyway, let's get down to business. So obviously, evidence is showing that US small businesses employment is declining. Obviously, we've had no job data. So obviously, looking at this, doesn't look good for small companies. Obviously, we'll wait for official data to come out. But yeah, it looks like small companies have started declining to its worst levels for a while, which is what it is. But obviously, we'll see what happens with more Fed cuts, more job data that's coming in. We'll go from there. But then when you see it on this way, when you talk about small markets, you see that the emerging markets they're on fire compared to anything else. So obviously they've been on a fast incline. So it's a bit misleading, really. I guess we're just waiting for proper job data to start coming through so we can get accurate results on these. So it's interesting to see that the emerging stock market has, like I say, seen 10 consecutive monthly gains, the longest streak in 21 years. That's huge. So yeah, that's definitely worth paying attention to, especially for like small cap stocks, etc. But I know a few people. Oh, there we go. Hold on. Is that good? Is that better? Apologies. Is that better, Will? I feel like I'm it now. This is exactly what happens to me. It's StreamYard that does this type of stuff, and it never normally plays up for mine. So is that good? Yep, sound perfect. Yeah, there we go. Normally never plays up. So rightio. Next thing. So obviously we've seen a lot of movement on the mega caps this week. Nvidia's still topping it out, 4.6 trillion. Of course, this was before Friday close. So I know Google shares have changed now. Obviously, them shares are up a little bit. So if you're not eating it. Yeah, I know. Try not to put it too close to you, though. It never normally plays up like that, though. So it's quite strange that it's actually done that. But I think it's a StreamYard thing. StreamYard's quite notorious. My camera looks a little bit blurry as well, to be fair. Let's have a look. Make sure the audio. No, it's picking it up right. So yeah, no, that's fine. Is everything all right now? Can you hear it fine now? Is that all good? So yeah, obviously Nvidia, Apple, Microsoft, obviously Google moved a lot over after hours on Friday, so that was good to see. Obviously Berkshire was probably the reason why it moved up so much after hours. Warren Buffett obviously bought his 17.8 million shares. That was massive for anybody that was holding Google. So I mean, Google's seen a really good rise this year. It's been absolutely killing it. I think it was like the lows of 160. Summit lows are there, but it's absolutely flying there. Yeah, let me have a look exactly where it was, because it's been flying, isn't it, as of late? Yeah, it's at 287.61 now. So absolutely flying, which is good stuff. So that's good to see. Next news. So the US and Switzerland announced a deal over the weekend. So obviously he slashed on the Swiss imports to 15% from 39%, secured to pledge for 200 billion in Swiss investments in the US by 2028. So the US is killing it on this. I mean, you can say and do what you want about Trump, etc. He's not the perfect candidate for everything, but on the business side, he's definitely growing the economy in the US. So GDP over the next couple of years should look better and better. You've got all the Saudis money coming in and stuff like that. So that's good. So there we go. There's a little bit more news. President Trump also said over the weekend he only cares about one thing, and that's being number one in crypto. And it's funny to say that because obviously what I've just seen is crypto is now in extreme fear as of 20 hours ago. And I believe over the weekend, so Bitcoin's down to 94, but it might even be a little bit further down now. So yeah, a bit. Well, that's in pound, isn't it? So but yeah, it's at 71,000 pound now. So look, see if I can find it in USD. Yeah, so it's down to 94. Is that as accurate as that? Yeah, 94. Yeah, there we go. So that's the lows of lows for a while. It's not been that low for a bit of a minute. So that's interesting for sure. So it asks you the question now, doesn't it? Is the price being pulled down for a reason? Is people trying to load up because of that? I mean, it's hard to say in Bitcoin because it's. I mean, obviously, as soon as people sell it, it's easily brought down. It's not as much as most of the other stuff out there. So obviously, Bitcoin 94,500. Bitcoin is now down 25% from its all-time highs of 126k on October the 6th. So, but it has seen further declines previously. So yeah, it's down 32% since then. But obviously, it's seen bigger declines in the history of time. So this is some interesting information to see for sure. But obviously, then when you start looking at asset class and you start looking at what's where for the year, I mean, gold this year's been absolutely killing it. You've got emerging market stocks, which is third, up by 25.7%. The Nasdaq is up by 19.5%. And of course, if you're in individual stocks, you're in like smaller low cap, mid cap stocks, etc., you're going to see more movement in these stocks. But when you're looking at ETF funds as a whole and looking at asset classes as a whole, like I say, gold and stuff's been absolutely killing it. So emerging stocks has been it. So I know a lot of people hold this in their ETFs, etc. I know. I think you haven't. You will. I think you've got one of these in there. So, but like I say, if you look at the cash right down at the bottom, US cash only up 3.7% this year, which is but when you look at Bitcoin's massively down at 1.2%. That's as of this week. So if you held Bitcoin this year, it's actually the smallest gained asset class. Yeah, exactly. As Will says, diversification is important. Agreed. Like I say, Bitcoin is been on a massive run and it's been killing it. But then if you look at it as an asset class as a whole, if you bought Bitcoin this year at the beginning of the year, you actually would have made more money off any of the above things. So yeah, it's definitely something to keep in mind. So, but yeah, so that's that. Obviously, again, the next tab. So obviously, consumer sentiment, it's been really low lately. It's been lowest it's been in forever. I think even around COVID times and stuff, it wasn't this low, which is crazy. So obviously, if you've got stockholders, the biggest stockholders are the people that are benefiting the most at the moment. All stockholders are sort of benefiting, but if you're a non-stockholder and just a cash holder, or just your day-to-day, everyday civilian that's not investing and stuff, you're actually worse off than everybody. Now, obviously, some of the comments I've seen on this, this was actually quite in this one here. When the bear market arrives, and it will arrive at some point, those with cash will be better off than those who own stocks and are buying now. Hedge funds are currently cashing out, while retail investors are buying. The fact is, the stock market is very highly valued. Buffett is not sitting on a huge cash position for nothing. Now, I do sort of believe with this, but not all the time, not completely. Obviously, the case of the matter is, obviously, you buy and sell stocks, etc. But ultimately, timing the market beats trying to time it. And obviously, sitting on cash isn't a great asset. Evening, John. How are we, mate? And again, as Will says, inflation is coming, holding assets is so important. So yeah, agreed. Like I say, when you've got cash, people don't take into effect like inflation, etc. So £100 this year isn't worth £100 next year, even though the same monetary value, the actual value of it isn't the same. And then obviously, when you look at this, and this is another part to pay attention to, the S&P 500 maximum intra-year end versus end of year total returns. So all these red dot series, what you can see that the market did in the year before rebounding into the growth that it had. And I think this is a very interesting chart. And I've saved this one because I like to look back at it. Well, let's just look at the last 5 years. So we're looking at last. Let's look from 21. So 21, the market was up by 29%, and then in 2020, and 21, it was at 22. My eyes are terrible. In 22, it was down 18%, and it stayed there. But then in 23, it come down 10%, but then finished 26% higher. Same with 24. You've seen it drop 8% in a year, but then it finished 25% higher. Same here. You see it like in year to date 25, you've seen it drop 19%, but it's actually up 17% year on. So how you doing, Ben? Welcome, mate. Big up, John, chilling on the stream at the night time. So it's very important. I've forgot to send this. I only seen this one earlier, and I chucked it on the chart real quick. But yeah, this chart is very important to show you that time in the market is better than time in the market 100%. Because if you try and see these prices down to, I mean, some of these, look, seeing it drop as much as 34%, yeah, before rising 18% before the year end. And but yeah, as you say there, George, agree. Since 2018, looking onwards, you're starting to see a lot more volatility than you was in it. But it's always been the same. The market always sees a pullback period, but people aren't too happy with that, are they? So it's one of them. So yeah, so that's that. So obviously, before we go into the next section, obviously, he did a case of we have got the ebook. So if you are new to the ebook and you've not seen the ebook, it is free. It is down in the description. So go and help yourself. Inside this ebook, we'll touch on a lot of the stuff that we're about to go through. So for instance, I use this myself. So useful market events. So you've got all the things that are happening. Same with the earnings season, when they happen, economical data, when things get rescheduled, all of the above. So yeah, there's lots of stuff in there, and there's even some cheat sheets in here as well. So if you go down to the final, it'll tell you the valuations, it'll tell you some cheat methods, etc. So it's definitely key to have. Simi, any recent book recommendations? Some of the guys have obviously on the interviews been recommending stuff, so I would go check them out. But as of the moment, I'm still reading Think and Grow Rich at the moment. That's the one I'm on. So I've been slacking a little bit on the reading lately, so I need to pick it up again. But that's that. One thing I was interested in is obviously 13Fs, etc., have just been coming out, which we'll touch on as well. Which I think it is in here. Yeah, so where was the data? It's here somewhere. Is it on the 13F data? There we go, Form 11K. It's here somewhere. There we go. Institutional holding reports, so the 13F ports. So obviously, reporting quarterly, and they must be filed within 45 days of each calendar quarter ends. So obviously, end of March, which is Q1, they have to be reported by the 15th of May. Like Berkshire and stuff like that, they literally report on the last day all the time. So as you just seen, Berkshire's come out on November the 15th. Obviously, it's November the 16th. Well, yeah, so it was on November the 14th. So it's there about. They have to be filed by this last day. So it was the day before. So we are going to touch on some of those in a minute anyway. But I recommend people do this as well. I don't think anybody's asked me for this and anybody uses it. And it's highly recommended, especially in downtime. And I'm going to start pushing this a little bit more in the server as well. This is an investor check sheet to see whether you even should be holding what you're holding, or if you have enough conviction in what you're holding. Because like question one, do you clearly understand the business model and reason of owning each stock? If so, but obviously if you go through this, you need to be aiming for at least 14 plus these answers. And there's 18 questions. If you're below 14, then you need to start asking yourself real questions about why you're holding what you're holding. So it's, you know what I mean, it's one of those. Is there any specific file you think is most important? I mean, they're all. I guess they're all quite important. I mean, I guess favorites are like the 13Fs, etc. Obviously, 8Ks, etc. They're all what happens. 10Ks, etc. Like I said, they're all as important. I don't think there's any one that's more important than the other. But if you go for a favorite, mine's 13Fs. I prefer it. Berkshire's, but that could change. Yeah, it could. A lot of those, like, and because he's like the biggest one that holds them, a lot of people like to follow. So like Bill Ackman and people like that, they also do it on the final possible day or day before. But so everybody follows a common trend. How do you find a body Hondas? Hondas. I've seen someone else put that somewhere. That's just made me giggle. Hondas, we found from the server, if I'm completely honest with you, and that's why the server's so powerful, which the QR code is below. Again, if you want to join, it was meant to be below, but it's not there. So media assets, let's have that. There we go. So it is now. There's the finger. So if you want to join it, scan the QR code, and you'll be happy days. You'll be on your way. But yeah, people. Toyota better. People obviously bring stocks into there. They talk about some of the lads found Ondas when it was 79 cents a share. Not many people paid that much attention to it. And then obviously more and more it got spoke about, more and more it started coming to light. People started picking it up at 150, 160, and I got it at 179 a share. Next thing you know, everybody's jumping on it. So yeah, so obviously everyone's jumping on that. But what happens with the channel, which is really good, obviously, let me pull it up real quick, and then we're going to move into doing why this Discord server is so powerful. Is it's quite a cheat code, if I'm honest. People in there are so smart. You got people in there who are constantly working. People like Will, Jordan, people like this that are in here. It's a cheat code. They're constantly talking, constantly going in there. Everyone's always working with each other, giving each other more loads of DD and stuff. I've got loads of messages here, so apologies. So when we go down here to Ondas, it's got its own channel. I mean, it's Saturday and Sunday. People are resting over the weekend. Look, it just doesn't stop. The lads are constantly putting DD in there. Look, it just doesn't stop. So that's how we do it. So yeah, like I say, I think Jordan's sitting on the nail there. Exposure, I'd say. Be open to as many forums as possible to hear things get mentioned and go from there on your own DD. Again, that's what's really important. Don't just follow the hype, because people, BYND, for instance, people talk about stocks like that, etc. They followed the hype, and then look, people got burned. If it's, don't follow trash, follow stuff that's good. Do your own DD, and pick up the boys. I'm not giving any many recommendations. I sort of googled. But yeah, do your own due diligence. Always do it. Don't follow all the trends, because all the trends will get you burnt. I mean, obviously, look at RCAT and stuff like that. People have been comparing Ondas, RCAT, all of this for a long time. RCAT's gone from 14 down to as low as 7, I think it is now. So it's halved in price. And yes, Ondas did the exact same, but then it's been backed with solid fundamentals and a solid earnings. RCAT's earnings have come in and they're missed. So yeah, it's very important. Like I say, I'm obviously going to be more biased because I'm in Ondas. I've obviously got relationships with CEO and people on there as well, so which is great. But that's also that's incredible about stuff like this. I've been able to build a channel where I've been able to now get in direct contact with like a CEO of a company, and people are giving me time, and I think that's fantastic. So anyway, what is your thoughts on how? So I'm not going to do too much about talking about stocks so much, because I want to help people do with the DD and understand stuff. But my thoughts with Hive at the moment is I'm upset with them because they haven't released the earnings properly, and they left everybody hanging. So I sent them a stern email yesterday. But yeah, that's my thoughts on Hive at the moment. Decent company, but needs to sort of shit out. Right, so let's get back into what we was going to do. So I'm going to do it by slides, because I think that's more important. So I'm going to get faster as we go along, so that's good. So one thing before we touch on anything else, just going to look at the index calendar real quick. So obviously got a lot of stuff coming in this week. I was looking into November. Yeah, we are in November, Joe, that's why. So you have to bear with me. I was having a mooch earlier. This is again part of the apps that are in the ebook. A lot of stuff happening in this week. So going into Monday, obviously got data coming out. Oh yeah, there we go. 76 best. I was looking for the weekend then. So we've got the first lot of data that's coming out next week. Well, we still got a few things to touch on in the Discord actually, so I do apologize for that. Let's pull that back up. Where's the Discord gone? Because we've got the first lot of data that's coming in next week, which is great. We haven't had some data in a minute, so it's good to see that. We've got obviously some big earnings coming into. Where are we? Announcements. So Will puts a lot of his time into this as well, so I'll give him his dues. Me and Will monitor this quite well. So obviously this week we got big ones from Nvidia. I know everybody's going to be watching the market for that. How do we access the ebook? Sorry if I said it's in the description, mate. I think. Oh, actually, let me have a look. Did I? I might not have added them in yet. I will have a look after. Let's have a look. 2 seconds. Let me just double check that for you, mate, because I think I put it in there. But if I didn't, it's in the other ones, and I will put it in after. If you have a look at the other live streams, let's have a look. Oh no, I didn't add the links in yet. I will add the links in after, so it'll be in the description, or go to one of my other videos, and it'll be there as well. So it normally is in there. I was rushing earlier to get everything done, so it's not there at the moment, but it will be there. Oh, it is in the Discord as well. There you go. Will's on it. Thanks, Will. So yeah, as we say, this week we've got big earnings from people like Nvidia. But I think obviously that's one that they expect well too much for anyway. But hopefully we need those to hit. Then your next ones that people really need to be watching is your stuff like Target and Walmart, because that shows consumer sentiment as well. That shows that people are still spending, that money's still coming in. Things like Klarna, apps, but mainly ones that you're looking at is Walmart. Walmart is one that's heavily watched. So Walmart and Target will be two that I'm very much watching this week. And obviously the obvious is Nvidia. Everyone will be watching for Nvidia. So that is that. So, but yeah, even that book's, it's got all the tools in, so that's good. Obviously, key events this week. We've got the manufacturing data on Monday. We've got Fed meeting minutes on Wednesday, video reports on Wednesday, September's job reports on Thursday. So we've got some really big, and you've got 14 Fed speakers speaking this week. So again, all this gets posted into the Discord every week, every Sunday. You get all the earnings. Will works his magic as well. I'll give him his dues where they are. You don't miss a beat. We put only the important stuff in there, of course. Up the boys, 40% beat, 43% on the other. Absolutely huge from us. And then obviously you just got to look at straight competitors. And, I'll just let everybody read that. Minus 60%, that says. As you can tell, I'm bullish. So yeah, massive. Right then, let's get into why everybody's here. So let's get rid of that calendar. So I think what everybody should do, and this is why it's important to remove this. So what people should do is use things like ChatGPT and stuff like that, but don't use it for due diligence. And what I mean by that is this is obviously going to be a basic entry into this. This isn't going to be something I'm going to be going really, really into depth, but we're going to do it. I think it's very important to use LLMs, but don't use it for your number. For instance, watch this. Let me ask this. What's this? And this is why you can't use it just for everything. So it's looking for Google share price, 276, wrong. Because that's picking up when market close. That's not the price now. That's when market close price. Price now is 280 something. So this is why you have to do your own. So this is where you have to do your own research. You can't just rely on this. So what I use ChatGPT for is I find the data, feed the data into it, and then let it help me that way. For the CEO and stuff, and obviously it's different. That's what we're going to do. But the stock that we're going to look at today, obviously it don't matter what stock we look at today, but the stock that I'm going to look at is one of the best companies in the world with the best stock balance sheets. I don't invest in this company. And after I started looking at this earlier, I wish I did. So Google is the stock we're going to look at. I am going to chapter this when I go back through. I'm going to watch it and chapter each bit so people can come back and watch it as well. So obviously put your comments in the box. The lads will bring it to my attention, obviously, as we're going along, and obviously we'll pick up on stuff. So the things we're going to touch on is first what I'd look at in the stock as a basic entry. You're looking at the CEO, looking at the finances, you're looking at the news, and you're looking at the future growth, PTs, etc. That's what you're looking at. We're going to touch on basic stuff today on the finances to help people get a grasp of understanding there they can value a stock themselves. So first, obviously, like I say, we're going to be doing about Google. So first things first, I want to learn about the CEO. So who's the CEO of Google? Obviously, again, people are going to know basic entry, but you're going to need ChatGPT and stuff should be used as a tool, not used as a cheat code. So it's going to give you basic stuff of who he is when he became the CEO. Obviously, normally when you're looking at a company, you do a lot more due diligence on this. For myself, it's because I know the Google CEO is. I know a lot about him and stuff because obviously I've researched it already. So what you do, start looking at it, and you start looking at asking questions, strengths and weaknesses. You start asking questions, build up a little bit of a repertoire about the CEO. So you start looking at strengths, start looking at this, start looking at his history. What's he done? Where's he doing? Does he know what he's doing, etc.? Because I said this before. John, the research feature on ChatGPT is can he always integrate the info for his site to make sure the info provides actually? Yeah, 100%. That's exactly what I mean. Don't always just go off things at face value all the time and just think that that's that it's 100%, especially with numbers. Finances, I don't trust ChatGPT. I'll go and find those numbers myself. That's what I do. Stuff like this where I'm learning about the CEO and stuff like that, I trust ChatGPT and I'll still verify everything, but I use my own sites for a lot of the stuff. And I verify everything. So just number wise, you do because, like I say, the share price is wrong straight away, but that's because it knows what it closed at. But obviously, the market went up. The share price went up after market hours, so that's important. So build out from your CEO. So obviously, look, you start looking at all this. Look, it gives you what its weaknesses. When I see this TLDR, it reminds me of Will. It's something Will would say. As Will said, you're both correct in my opinion. So LMs aren't good enough yet to be correct in everything. 100%, totally agree. It's good for using a tool for like maths, for instance, and stuff like that. It's good, like, for instance, what we're going to see in a minute. I feed it all my information and I'll let it make me a report of the information I found. I don't go to it. Here we go. If we do this, is Google a buy? I don't do this and then go, oh, yeah, there we go. So because ChatGPT, here's a breakdown of Google, where we're keeping in mind its general commentary. Look, I don't go off this and go, oh, do you know what? That gave me enough information. No, I'm going to buy it. Like, you know what I mean? You can't do that. Like, and it's probably wrong as well. There's some data I put in there a lot of the time and it's wrong. It's miles out. So let's move on to the next thing. So stuff we're going to start looking at. CEO. Always looking to your CEO. Don't matter how good the company are if they've got a crap CEO. Firstly, you want to see if the revenue is growing year by year. So best tool you can really use for stuff like this is you want to use your Who Finance. I find it's one of the best, but again, don't trust everything. You've got to do your own work as well. Don't get lazy with it. So let's have a look. Let's do some research to Google. Let's let people start doing what they need to do. So first things first, you want to look at the finances. You want to know, is the revenue? Let's have a look what George's saying. I think a good rule is generally inside and outside of investing never makes it, take away off just one source. Yeah, 100%. Completely agree. Always get your data in, always get what's right. So when you're looking at revenue here, so you want to make sure it's growing every year. Now, there is a rule of thumb for what really you want to be looking for, but it doesn't actually mean it does it, because obviously Google's such a big company. It's not going to be growing the same size as Ondas every year, for instance, because Ondas is a growth company, whereas Google is an established company. But revenue growth by sector, you really want to see on revenue, tech 20% a year, industrial, you want to see 10% a year, and blue chips, you want 5 to 10% a year, really. So to work out, if you want to do the math, you've got two ways of doing it. So to do the math of revenue, you do current year subtracted last year and then divide it by last year and then times it by 100. That will give you the percent growth. Or you can do exactly what I was saying, and you can use ChatGPT to use it for what it's intended for, not the lazy method. You can scroll it over here. You can even get the last couple of years, look. Copy it over, get it into here, and then ask it. Now you're not being lazy and relying just on its source. I'm sorry, I need to switch back to the tab. So now we're putting a picture of the screenshot of each of the revenues in, and now we're seeing what percent it's growing on year. Now it's going to work out the maths for us. So now we've got the year-on-year growth. So every year, look, it's growing 9%, nearly 10, 9%, 13.86. So the revenue is growing year on year, which is good. That's a start. So that's our starting point. That's exactly what we want to look. LMMs are good for sentiment and cinematic analysis. Excel sheets, you still have a quant valuation on it. Yeah, agreed. Like I say, it's all about how you prefer to do it. I used to use Excel sheets and spreadsheets, but it's not my personal preference. So I prefer to find the facts and do it this way. So if you want, like I say, so it'll start asking me stuff if I want it to do stuff. I don't want it to do anything. I just want it to do what I want to do and build it up. John, I enjoy your directs. Appreciate it. John, have a good evening with your Mrs. Mays. Off to eat my gyros. I love a chicken gyro, so I do. Went to Greece, had them every single day. Great example of using two options that complement each other in your DD. Yeah, Jordan Will are going to keep up with it as well. Nice one, Vlad. Thank you very much, man. I appreciate it. I do try and help as much as I can, so I appreciate you coming to show some support. Thank you. And everybody that is watching, I can see everybody that's obviously watching that. Can you like the video? Drop it a comment, obviously, after as well, but just drop it a like, and that helps support the channel and stuff. So I do appreciate that, like. So thank you. So first things first, there we go. We've worked out the revenues growing year on year. That's important. So we that wasn't hard. We can do that off the basics of what we need to do. So we've learned the revenue is growing year by year. So now we need to have a look at the gross profit. You can use the same maths. So again, if you want to work it out manually, it's the current year subtracted last year, divided by last year, and then times it by 100, then you'll get your percent. So obviously, again, we can use the method we've got. So if we literally just bring it over to your screen, get your snippy tool, snip over the gross profit, you know what I mean, drag it out for the years, then we'll get into some more technical stuff in a sec. Switch it back over to here. Now you're going to put in there gross profit percent growth. Obviously, we're building a repertoire here. So we're building a system between everything that we're getting. We'll start going into EPS and everything in a minute, the important stuff. We have to start off with the basics. So obviously, we're trying to value the fundamentals. So every year, look, gross profit, 6%, 11%, 17%. That's huge, man. Google's balance sheet is one of the best in the world as well. It's absolutely nuts. Jordan's an OG for this. He's been in it. I think his portfolio is 90% Google. So bravo to you, George. Defo making bags. So again, what this shows, gross profit is accelerating massively. Early years were mid-single to low double digits. 2000 saw a huge jump. Trailing 12 months is still strong at nearly 12%. Absolutely incredible. Here we go. Jordan's preaching. Look, he knows Google's the one. I'm actually pretty gutted because when I did this DD earlier, so I made sure I was good for the stream. I wanted to find a stock that worked, so it was easy to do, so people can understand the basics. And when I did the DD on this, I was quite annoyed actually because it's been flying. So now we found out our revenue's growing, so that's good. We found out our gross profits are growing, so that's massive as well. So next thing you need to do is EPS. Now you can get your EPS from here. So you've got 10.23, but if your EPS isn't here, how do we work it out? So it's total outstanding shares. Sorry, it's net income divided by total outstanding shares. Now this is where Google gets people. So what we're going to do is we've got net income, which is here. Now, this is in thousandths as well. So obviously this is in billions. So it's 124.251 billion. Now, when you go to, so we're going to get this number first. So we're going to work out the EPS. So obviously this is where it's important. Attention to detail matters. So we're going to copy this. I'm going to put this over into our LLM. We're just going to copy and paste it to there. Now, this is where attention to detail matters. Now, when we go to stats on Google, and we go down to find our shares outstanding, see how it says 5.82 billion? That's actually incorrect. And this is why it's important that you do your own DD and not using LLMs. The actual is implied, it's 12.17. Now you might go, well, why is that the true method? Because Google has 3 different shares. I believe it's A, B, and C. Jordan, you might have to correct me if I'm wrong on that, but it has 3 different breakdowns of shares. So actually all of those shares together is actually this number, because Alphabet's obviously 1, but when you're buying shares, let me see if I can show you real quick. So when we go to trading 212, and you type in good old Google when it wants to work. Right, let's have a look. So yeah, we've got A and B, A and C here. I'm not sure where B is. Jordan might have to help me with that. But yeah, we've got different ones, and all those are the same stock, but obviously they're different voting rights if you own like a lot of shares of Class A, etc. So yeah, that's why it's important. So actually we've got 12.17 billion. So when we work out the EPS, yeah, we can copy that as well, and it's going to give you a better number. So it's employed. Let's copy this. Now you can even say to it, work out the EPS for me. And what it'll do is it'll show you the maths, and this is how you get better with it. So it's going to do, look, net income 124, 12.7 thingy. So the EPS, hold on, there we go. So this here is, it's worked it out wrong. Look, so what it's supposed to, see how it's done it, because it's pulled that up as million, and that's actually billion. So the net income, sorry for saying net income. See if it picks it up. And this is what I was saying about, you have to make sure that you're on the ball with your DD and make sure you're using it properly. So there we go. Now look at the EPS, and this is why you have to get the details yourself, and you can't just ask an LLM for the results, because you see how we got it wrong. Look, got the EPS miles off. Look, so far off. But now when we flick back and we have a look at the financials, and this is exactly why you can't be lazy. You have to be able to learn it, because otherwise you just get messy with it. Baker's EPS 10.23, and we've got our basic HPS at 10.21. Look, so it's very, very close, very close. Again, obviously, stats are always a little bit off. So there you go. So you've worked out your EPS now. So your EPS for trailing 12 months is 10.21. So all these details matter on what you need to do. So now you can use the short numbers as well with that, by the way. So what you could have done is, you could have done it exactly how it's done there. Look, you can use the short numbers because they're both in the thousandths of the same. They're both in billions. You can do the exact same numbers. So that's important as well. Just double checking something. There we go. Yeah. There we go, Jordan. There we go. Class B is in publicly traded for founders and XX. There you go. So again, Jordan's done a lot more DD into this, so he knew that fact. It was important for me, if I was to invest in this, to find out exactly why Class Bs aren't publicly traded. And Jordan, great example for looking beyond the surface in DD. Otherwise, you'd be mistaken for the shares outstanding, as you say. Exactly. It's about taking your time, man. And something I'm going to give you a bit of wisdom, and something I always say to people is, you'll go 2 hours to work for 40 hours a week. So you'll earn that money, and whatever money's left is what you'll choose to invest. But some people won't put in 5 or 10 hours in DD. Makes no sense. So how are you going to go work for 40 hours at a job, but then with that money, not put the effort in of 5 to 10, 15, 20 hours to learn how to make that money and then work for you? It makes no sense to me with some people. So yeah, that's important. So there's your EPS. So now what we're looking at, now we need PE. So we need price to earnings ratio. Price to earnings ratio is the share price divided by the current EPS. And this is why this changes all the time as well. So let's work out the PE. So it's a share price by current EPS. So the current EPS is 1021. So what's the share price of Google? We're going to go with, obviously, Class C's because it's more. So again, you got to just use your tools. You can do the maths yourself, or you can do what you need to do. So copy this, pop it in out. I'm trying to show people the basic the beginner entry level of this, and that's why I'm trying to make it as simplified as possible. And then the EPS is 1021. Now, to obviously do it yourself, the PE is share price divided by current EPS. So, which is going to do there for you. And the PE is 28.24. So that means for every dollar you invest into Google, you pay for every dollar Google earn, you're paying $28.24 is what the difference is. So now the important thing, so we've got the PE, which is 28 is pretty good to be fair, it's quite low. If you look at likes of Palantir and stuff, they're 400. They've got a lot of growing to do to grow into their share price. Google, obviously, anything below 10 is like right there in its share price. But also, what people are mistaking it for is thinking that lower is it's better. That's also incorrect. It's got to have some growth into the EPA, into the price to earnings. Otherwise, it's just fair value stock. There's no more in there. So you want it. Anything under 10 is good, but obviously 28.24 is good. So now you need to work out the forward PE. So where's this stock going next year? Now, what you want is you don't want the forward PE being 35, 40. That means it's not actually growing, it's getting smaller. What you want is the PE to be lower than what it is now, the forward PE. And of course, it's only an estimate. It doesn't mean that that's what's going to happen. So the forward PE is share price divided by expected EPS. Now you might go, Jay, how can I find the expected EPS? So you can use your sites like this. And if you use, I like peg ratios, it's coming. Don't worry. That's in there. This is in there as well. So obviously, when you come to your analysts here, you can see the projected EPS of what's happening. And now because Google's such a big stock, obviously it's got 61 analysts. So if we have a look at the average next year, they think is going to be 11.11. So we'll use the average. We won't use the high, won't use the low. We'll use the average. So that's what most people think. So the average EPS for next year. So estimated. Yeah, we'll put this. Expected EPS is 11.11 next year, and share price is 288.25. Oh, there we go. Forward PE. It's what I mean. You give it the numbers and let it just be your calculator. Let it do your work for you, but you do the work to get it. So now we're looking at forward PE. Forward PE is 25.95. So that means next year, Google expects to grow inside of its own earnings, which is good, which means it's going to be growing as a stock. So as that, so but at the moment, the boxes are being ticked off. So there's your forward PE. That's your PE. Touching on a lot of bases here. Now the next one, as Arun just said, peg ratio. So the peg ratio will tell you if this stock, George, all great for one, all of balance, like peg can be better suited for Palantir, for example. Now, the peg ratio on Google actually says that it's overvalued. Now, this might be, again, this is why you have to take all of them in. For the fact is it's grown by like 100 points or so this year. Google is absolutely fine. Let's have a look exactly how much it's grown this year. There we go. Let's show this. Google is up by 65.77%. That's up by 114 points this year. That's nuts for a big cap stock. I mean, that's crazy. I mean, in the last 3 months, it's up by 83 points. So you literally could have bought Google in August for 200 and now it's 288. That's mental, man. Good for super high growth. Yeah, peg ratio is treason. Right, so let's get back into it. So peg ratio. So it's the current EPS minus the expected EPS and then divided by the expected EPS and times 100. So again, we've got the current EPS price, which is, get it back up. So let's get the current I'm trying to do it without doing it the way I do it to make it as simple as possible for everybody. So people can come back and reference this and use it going forward. So the EPS price, let's scan that in. Oh, so basic EPS. And again, there's a difference between diluted EPS and basic EPS, which I will go through on the next point because that's important as well. So you've got basic EPS. Oh, excuse me. Yeah, too much talking. Dribbled on yourself, Joe. So funny. Expected EPS. So the expected EPS was 11.11. Expected EPS is 11. And work. Always use your manners as well. Manners cost nothing to your LLMs. If anything happens to the war, you'll be all right. So like I say, look, it's got current EPS, forward EPS, current price. Now it's doing the maths. Look, you ain't got to stress yourself out. Look, it's doing all the maths for you. So the PEG ratio is, so it's working out 3.28. Here we go. Now it's going to be a breakdown. Look, it's even going to help you. So 3.28. You say if it's under 1, it's very undervalued. If it's 1, it's fairly valued. If it's over 1 up to 1.5, it's expensive. And if it's over 2, it's very expensive compared to growth. Now, see, this is why LLMs are good. Look, I've just done all the work. I've got all the numbers. I haven't asked it to do any of that. I've got all the numbers, and then it's doing the working outs for me. If you're not very good at maths, you're not very good at stuff like that. Use the tools that are there. And this is when people say AI is going to replace people. It's more about the case that it's about making more jobs more efficient. Because you got to think, when we didn't have this, I'm smart at maths, to be honest. So I'm quite good at this. I'm terrible at English, though. So I use it for a lot of English stuff. But yeah, so as this means, so 3.28 means Google's growth outlook doesn't justify the valuation if we only look at next year's EPS. And that's why it's a little window. So far we've ticked 6 or 7 boxes, but now we're getting a negative. So it's about taking it on board. And then obviously you can, if you want, can also calculate PEG using Twitter. But I don't want to start doing that because it's going to start plucking numbers out of the air that it doesn't know what it's doing. We're getting a false representation. So now one of my favorite ones. So debt ratio. So debt ratio is liabilities divided by assets. So when you come out now, Google, by the way, has got next to no debt. Absolutely smash it with debt. Where we go, financials, yeah, balance sheet. So as you can see, total debt down here, it's 25 billion. This is all thousandths, remember, and it does tell you that there. Look, all numbers in thousandths means add 3 zeros onto everything. So total assets divided by liabilities. So liabilities, yeah. So again, do it this way. You can work it out yourself, or you can just do it this way. This will be for last year to show you the debt ratio. And oh, I didn't share that, did I? There we go, my bad. Yeah, so look, so here, got your debt down here. So 25 billion, everything's in a thousandths of numbers. So we've got total. So what we need for the debt ratio is total liabilities and total assets. So that's it. Look on the balance sheet. Assets, liabilities. Copy them. Bang them into here. Debt ratio. Now, debt ratio is actually one of the things I always firstly look at. I don't like a stock with loads of debt, personally. Every stock, every company has to get depth to grow. I understand that. So, but you don't want a mass. And look at all this maths it's doing now. So debt ratio is 0.28. Now, is it going to give us a breakdown? Okay. So it's not. So what it means is basically you want a debt ratio to as close to 0 as possible. But obviously you have to understand that companies are going to take on debt as well. So 0.28 is extremely low and extremely healthy and extremely good for a stock. So, but again, it depends on sector. So banks tend to lend out a lot of money. So their debt ratio is 1 or above. I'll have a look at it. So obviously, if it's closer to 1, that doesn't mean that a bank stock's terrible. It just means that it finances or lends out a lot of money. So, but debt ratio of 0.28 in Google's case is really good. The closer it gets to 1, it means for every dollar of assets, they've got a dollar of liabilities. Obviously, you can't have that. You want more assets than you have liabilities. So if they stop trading business today, Google, they stopped having any fundamentals come in, any of that, obviously, they'd be all good for a while. Touching back on that, which is also important. Sorry, I did forget something. On the income statement, what it's important to look at as well is net income. Operating income. This is, you want to do the same for the revenue, is the actual core business money. So obviously what you want to do is that needs to be growing because that's actual Google's fundamental money, what they're making from a stock. That's important. Obviously revenue it can come from assets on the balance sheet, side arms of the business, things that aren't directly linked with Google, but Google owned. Let's say Google owned, I don't know, all the vending machines in the world. It's not their core business, but they're earning money from it. That goes to their revenue. Operating income is what matters. And also operating expense, because operating expense means how much it's costing to operate. So obviously this can be from staff. This can be from lots of stuff that's in there. So business expenses, but yeah, that's important. So obviously if they take on big staff and new staff, that's important. But yeah, operating income, pay close attention to that. So that's basically the financial side of what I would look for, if I'm honest. So that's everything for a basic entry. I do go some deeper on that, but we've touched on now. We've touched on revenue. We've touched on gross profit. We've touched on EPS. We've touched on PE ratios, forward PE ratios. Now, obviously, the basic EPS as well is shares outstanding to the business that everybody can buy. And obviously, diluted EPS is shares not yet issued for like staff warrants and stuff like that. So that's important to remember. We've covered debt ratios, we've covered PEG ratios, very basic but very good, need to be fundamentals understanding. Let's catch up on some of this. Everyone says he likes to see share buybacks instead of dilution. You mean dividend? That's slightly different too. I suppose say, yeah, I think you mean that. I think you mean dividend. I suppose say they want share buybacks would mean there'd be less shares. Oh no, sorry, I get what you mean there. So you'd rather see them buying back shares instead of diluting the stock, of course. That makes sense, of course. On top of that, so next, what would you start to do? So obviously, let me start running through some of this, make sure I didn't miss anything that I wanted to share. No, that was it for this lesson. It's a bit of a 101. So the next things that you want to start looking at is 13Fs and stuff, is your stock being growing and stuff like that. So when we look at this, there's a site here that I use to look at all the 13Fs. Is it worth taking out of a company with a lot of expert employees share? Yeah, definitely. Because if you're because obviously you want that. Because if you look at the companies like the look of SoFi and stuff like that, No gets paid out for every $10 increment. I think it was 25, 35, and 45, and he gets massive money. So naturally, he's going to want that share price as high as possible. So you know that CEO is going to work hard for your stock. If that's the case, do you know what I mean? So back to this. So obviously, when this site here, I want to start looking at if people are buying my stock. Oh, let me zoom in. So when you type in Google and you look at the activity for Q3, I'm ever so sorry about the ads on this site. So when you start looking about things we were buying and selling, so obviously if it was loads of selling in it, you'd be worried about Google. And there is quite a lot of sales actually in Q3. A lot of people were selling a lot of shares. So you got 3.1 million there, a lot of shares. But then you look here, Warren Buffett bought 17.8 million shares. Samantha, she bought 280 shares. You got Lindsay Train, she bought 205,000 shares. So it's important that so it's important that your stock's being bought. Now, I want to have a look at something, and I apologize, Will, if this is really bad. The trade desk. So let's have a look at this. Let's have a look at the activity. Oh, yeah, one person sold in Q3 and they sold everything. And that's again, it's a bad sign. If you're looking at your stock and on these, and all the super investors are just selling everything of it, you'd be a bit worried, wouldn't you? This was something that was worth interesting about Google as well. This is what I mean. It's about getting all your information together. So Google now will get, Buffett will now get $3.7 million quarterly dividend check from Google. That's nuts, isn't it, when you think about it? Like literally just on a quarterly dividend check from Google, he's getting 3.75 million. Mad. More money than some people see in a lifetime. Absolutely crazy when you think about it. So the next thing, obviously, you want to start looking at 13Fs, which I've just shown you. You want to start looking at, and you want to start looking at insider ownership. Now, this won't be updated from Q3 yet. But Simply Wall Street. Again, all these sites that I use, by the way, are in the ebook. It's all I'll give it away. I made that ebook. It took me a lot of time to make it. Just want to help people out. So download it, don't download it. Don't make a difference to me, but it'll make a difference to you. I'd advise that you do the check sheet as well. I'm going to do one myself again to make sure that I'm still up to date with everything. So when we look at this now, we look at ownership of Google. No one bought shares or sold shares internal last quarter. This won't be updated from Q3 yet. This will be from Q2. Now, this is massive. This is something you want to look at. Let me zoom in a little bit on this. I do apologize. Let's have a look. Ownership. So you've got institutions, which is 64.1% of Google ownings. That's 7.7 billion of the shares. The general public own 25%, which is another 3.1 billion. Individual insiders, so that'll be CEO, other people own 1.2 billion of the shares. That's crazy. That is on insider shares. And obviously then you've got your public, private, and state or government, which own obviously a fair bit of their shares. So this is good to see. You want to see mostly institutional holdings on the big caps that you own. The reason I say that is because when you look at stock like this, for instance, Ondas, so this is a good one to have a look at because it is heavy. This hasn't also been updated from Q3 and it's going to be massively different. General public owns 76%. What that means is when there's panic in the news, does institutional include ETFs? I'm not 100% on that, but I'd like to say so, yeah, because that's how institutionals buy on most of it, don't they? They'll, like Vanguard and stuff will put it in there. So possibility, because they have to report a certain listing of, well, it will be because they have to report a certain amount of shares in each ETF holding. So yeah, that would be that, mate. Yeah. So the general public owns 76% of Ondas as of Q2. So what happens with that is when somebody sends out a tweet saying something about the market, etc. Well, the public gets scared, and 40% of that leaves, and that's when you lose $5 of your share price because the volume's left the market. Now, when it's institutions who are a lot more comfortable, they understand it, you'll still lose some volume, but a lot of buying. This institutional percentage, I believe, is now going to 30%, which means that if institutional investment is building every month, every quarter, that's good for the stock. So it's good to keep an eye on. Gemini ads, whilst look at Google ownership. But you don't want it so hard that the stock is being diluted every year for the stock compensation. Yeah, exactly. Exactly. I agree with that, Will. So, like I said, there's many little factors to pay attention to. Now, you might say, Jay, where can I find all of my news and stuff? How can you find stuff quick? Now, again, you've got your lazy way, and you can do it this way, and you can ask a question on your LM. So you can say, top 10 news for 25 on Google. You could do that. So you could do your lazy way, which will pull you the top 10 things about Google this year. Did I open that up then? Yeah, I did. And it's going to start pulling you up some of the biggest headlines, and then you can go into it and start reading it. Make sure, don't just read it, do your due diligence, etc. Now, obviously, you've got your other option, which is, I'm going to pull that up now. So you've got your other option, which you can use an actual site to look into news with your own two eyes. Now, I use something like Weeble. I like Weeble for this type of stuff. I don't know if that's quite visible on your screen or not. Oh, hold on. Let me have a look on this. Oh, no, you can't zoom in. So when I type in, let's say Google, so obviously the order book on this, so you can see all the shares is a couple quid a month. I know it's not free. But obviously you've got all these charts. You can look at the options. Now, people, this is also a matter, I'm not sure how clear it is on the screen, so I do apologize. I'm not saying that it's very important, but you do need to understand it at some point as well about options, about understanding what they mean, how people trade them, etc. Because when you look at the order flow, our option statistics here, look, it's going to show you. So the volume put to call ratio 0.55. That means for every 2 calls, there's 1 put, which means there's quite a lot. It's quite well, it's not quite a lot actually. It's really good actually. Still, it's really really good. What's on there? Double checked. Yeah, would fall under institutional. Yeah, I thought so as well. I see. Thanks. Bought 1K of Googs on Monday. I'm like 20 shares now. Go on, John. Love that. Happy days. Happy days. Yeah, Weeble's class. I love the interface. It's class. So on here, you can see, look, a lot of people are buying the 280 calls. Now, what a call is, I'm not going to go too deep into this, is one call is 100 shares. So naturally, when when these guys are buying 55.95K of calls on the strike price, that's a lot of shares. That's a lot of volume coming in. That's a lot of upward momentum. This keeps happening. And then when you've got your call, I mean, you puts that are down here, and all your puts that are running up this price here as well, they're all getting absolutely rinsed, which then forces them to buy the shares and pushes it even higher. So yeah, it's good to have a look. Now, back to what we're saying, the news. Look at all this news. All this news, look inside from different sites, routers, Seeking Alpha, tip ranks. Now, I prefer routers. I like routers. Tip ranks, I don't mind tip ranks either, but I prefer Reuters News and I prefer Wall Street Journal, etc. So try and look for trusted sources inside here. There isn't any, that isn't, but you've got NASDAQ as well. I mean, so pull up your news into articles from inside here. But yeah, that's massively the deserve having puts on Google. Yeah, but this is how the market moves, and most people just think it's from common shares being bought and sold, but it's not. Options plays a massive part in it. So it's something I recommend everybody at least learns and understands. Doesn't mean you have to do it, but it's definitely a way for doing it. So I mean, like when you look at Ondasis, for instance, you start looking at options, like people buying a lot of the 7.5 strikes. If you look at the put to call ratio, it's actually lower than Google's. It means for every 4 call puts, there's 1 call. Apologies. For every 4 calls, there's 1 put. Sounds like money to me. Sounds good. So yeah, like I say, massive. Be interesting to see where the options open tonight. But yeah, that's mainly what you want to be looking at, if I'm honest. So I hope that everyone helped everyone. That nearly ran onto an hour, to be fair. So I hope that was a basic level of understanding fundamentals for a stock. I'm happy to do these in the future. I'm more in depth on certain things and to do some of those. But I hope that helped people out. But as on for the future, I'm happy to do any of those on the live streams. But I'm going to go back into this video and put the timestamps in there so people can. I was supposed to write it down, but I got very engrossed in doing it. But yeah, Google, by the way, if I'm looking at that, if Google was still at the price it was at before, I'd be buying it. For me, it's a lot of money to get a shares worth, etc. Now, but yeah, Google's. From looking at Google's earnings, but then we can do this. Look, we can do this as well. So we can look back at. Hold on, let's pull that back up. So what we can do is you can start asking it to help you make PTs. Now you shouldn't rely on it solely for your PTs, but you can definitely ask it to start helping you with it. So then when you pull this up now, so you can ask it and then see where you're at. So I would make my own PT and then see where it's at. I don't trust just LLMs for it. My own PTs I made for Nebius, which I said 80 to 100 by end of the year. Isn't looking too bad now. Obviously, I didn't factor the deals. I'm not going to ask like some guru because that obviously came and dropped down. On DAS, we said 8 to 10 by end of the year. It's looking like that's going to be quite thingy. So doing some pretty good calls. It is lucky though. You can set a PT and obviously it don't mean it's ever going to reach there, and never be ashamed to trim some profit as well. So that's important to do that. Right, so let's ask it for PTs. Realistic PTs based on the data for year end bull and bear case. Again, I wouldn't use it like this, for instance, because it's not my conviction. Then I'm asking somebody else for it. But if you look at it, so it's pulling all the details. It's pulling all the details that we found. So a bear case low, using the calculations. Look, it's doing all the maths for you. 245 to 267 is a bear case, is what it's saying from the data and the data that we've given it. You know, George, this will do you some favors on it. So a base case using the data we gave it, you're looking 289 to 311 by year end, I believe it was. And a bull case, a high assumption, code growth 30%, CapEx yields result first. So EPS beats and it's close to 1140, 1160. Market re-rates mega cap tech and PE to 3032. So now it's pulling those data. You're looking 342 to 372 on a bull case. Now these are interesting because it's actually pulled some, because we've given it all the data, it's pulled some actually really good, realistic year-end targets, to be honest. And actually they're not bad, actually. George, what do you think? Because you're a massive Google holder. What do you think of that? Being on a bear base and bull, since you're a solid Google owner, what would your thoughts be on that? My take is your bro knows your style. ChatGPT, no way. Poll, £300. Yeah, there we go. Yeah, let's do a poll. Top fans, let's do. Start a poll. Google 300 end of the year. Yes or no? Start the poll. There we go. The poll's live. What does people think? Get your rating on the poll. Do you think Google can see 300 by end of year? That would be huge, wouldn't it, for Google holders? It'd be interesting to see. What's yours? I'm not sure. Year end for me, but definitely looking at 340-ish in 2026. I mean, we haven't got that much left of the year, have we, really? So it'll be interesting to see where that goes. But 33% of people saying no, 67% of people saying yes on 300 end a year. To be fair, it's not that far off. And I think on Monday from open, we've seen this with United Health. What's this? Let's have a look. Let's have a look at this. So we've seen this with United Health, though, didn't we? 3 months ago. So when they came out, when would those have came out? The 13Fs. Yeah, let me have a look at this. Let me have a look at the exact date. So where is the ebook? This is why this is good. So it would have been August 15th, roughly, when the last ones came out. So let's have a look. Where's August? Is it going to show us that far back? No. But like I say, from there, where it was 310, it did see a run up. United Health and then back down. So like I say, when people start seeing Warren Buffett looking into stuff, they start getting excited about it, don't they? 64% of people said yes, 36% of people said no. So that was interesting. Members only live stream, we ain't doing that, are we? So that's an interesting thought of it. Things could easily reach it if we have a Christmas rally only about 5%, something like that. So yeah, this is where things like market sentiment starts coming into value. So we start looking at this data now. Let me zoom in. So next, zoom in. So obviously next month, at the end of this month, we've got GDP preliminary estimate on the 20th. This calendar, by the way, is the OP's thing. Some people will really gatekeep this information. And it's took me a long time to get a lot of this information together because some people just don't want to share anything, which is good. I understand it. But obviously the GDP, this is going to be into a lot of the stocks. Markets closed on that day. I'm assuming we've got bank holiday or Thanksgiving. Yeah, stupid. But yeah, we've got MSCI rebalances. We've got a lot going on the end of this month. But consumer confidence is going to be here on the 25th. I'm not sure how much of this data we should get all of it, but it's going to take a minute for sure. Obviously, you've got the GDP. That's obviously the preliminary estimate. So we get to see the US is growing, which I think will be fine. Next month, we've got some great data as well. Chinese EV delivery updates, jobs reports, unemployment claims, the S&P rebalance on Friday, the 5th of December. What does everybody think that we're going to get on the rebalance? Now, Will did put some interesting in for me earlier, which I appreciate, Will. Let's pull it up real quick. So let me load up that channel. Now, we was having a chat on whether we see SoFi ending in the S&P 500. So I think that we could possibly see it. Obviously, again, we'll see. But stocks that may join the S&P 500. So you've got some of these that might be in there. So yeah, I hope that SoFi gets it this time. Don't mean that they definitely will. But I think they've been going long enough now. They've been smashing it. They've been doing their bit, haven't they? So I think they deserve it. But it did take Hood a while to get in there, didn't it? So, you've got to take that into consideration. But yeah, SoFi would be nice in there. That'd be nice to see SoFi. Now, what companies do you guys think will be in there? Is there anything else? John, hopefully we get smoking and video earnings this week and it pushes the market. The problem is with video earnings, me and Will was having this conversation about it earlier in the Discord. The problem is they expect well too much from companies like Nvidia, etc. So even when they do smash earnings, they didn't smash earnings enough. And that's your problem that you're going to get. How are we, Rob? Big up, Rob. How are you, my mate? I hope you're keeping well. But yeah, so obviously I hope we see SoFi join it as well. That'd be huge. My PT on SoFi was 35 anyway. Like I said on my update yesterday, so my portfolio update at 35, I'd take some money off the table. And then at 45, I'd completely sell out the stock and I'd be happy with it. I've been in SoFi since 13. But I think it can go a lot higher than 35, 45, but they're my PTs. And again, it's about not being greedy, about locking in some profits and taking money off the table. Is there any other stocks anyone wants to have a look at or something? Like I say, we've run the hour now. So, no, I'm sure each quarter has been stellar and the stock just stays flat or dips 4%. Nvidia's hard, man. It's because people only see Nvidia at face value of what it is. It's one of Nvidia's price for perfection. Every earnings needs to be incredible. Yeah, exactly. And because obviously, I can't remember the exact number. Will, can you help me out with that? But obviously, I think the actual stock price is like crazy, but it's just been had stock splits loads. LPTH. So let's have a look at some stocks then before we finish. That's obviously something to do with Ondas as well. I believe LPTH, isn't it? So let's have a look real quick. Light path, isn't it? Trading 212. Let's have a look. Oh, let's go this LPTH. It's Light path, isn't it? Yeah, Light path. Ondas have got a partner thingy in these, haven't I? It's crazy, because I did a lot of DD on these not long ago. Now they're sitting at 682. There's just so much money to be made in the market at the moment. It's just got to be in the right place. Yeah, there we go. We'll look 83K or something. Rate splits in video that's fucking nuts, is what that is. Like Jordan says, yeah, if you're in first place like that, people don't expect anything less than what they've been showing. Yeah, exactly. It is the price of winning. We love investing in winners. Yeah, we're up over 1,000 subs now. We're actually over 1,100 now. I think it hit before I came on. Let me double check it on my phone and see where we're at. But we was at 1,100 when I came on. Let's have a look. Oh yeah, 1,102. Yeah, man. But crazy. Yeah, it's crazy to think I only started doing YouTube in May. I think it was, and already we're absolutely smashing it. We do giveaways a lot. The Discord's smashing it. I think we got 500 Peace out, Will. We've got nearly 400 members in there. To be fair, we've got a great team in there, though. You've got Will, George, me, Brad, Ben, absolutely killing it on a daily. Everybody does their part. So we've got a great team. So it's one of the best investing communities out there, and people are making bread every day, every week. So it's good to see. It's mad to actually see a community of people come together and making hundreds of thousands of pounds with each other. And that's not just against a group, that's everybody each. It's mad to say, like, so at this point, I've nearly made £100,000 myself this year, which is nuts. It's crazy to think that is. Someone would have said that to me 5 years ago, I would have thought absolutely waffling. So obviously, is there any more stocks that people are looking into? Anything that any share, anything that people are wanting to buy or people are buying? I know obviously I've been buying mine. I put out my update yesterday. Hope to see Ondas keep rallying, which is good. People keep putting yeah, Robbie was. So anybody that doesn't know Rob, I actually know Rob in real life. We worked together for many years, 6 years actually, didn't we? Robbo is a very good friend of mine. But yeah, I showed him this all the time at work, and he'd always watch my stuff and stuff like that. So I appreciate your support. Rob's a legend. And we don't know each other in real life, just on a Discord and doing our thing. Perfect comment. Yeah, and to be fair, actually say that, Will, I've actually met Brad in real life because of the Discord, which is crazy, but you are right, most people don't. Next year, I plan to sort of meet up for everyone. So obviously we're going to get everybody select people who have been in there a long time, everybody meeting up, going to get people connected, which is good. But yeah, we've got a very good community in there. Like I say, it's good because when things aren't good, it's good to have 100 people I've become very good friends with people like Will, Jordan. I've never met these guys, and I've become very good friends with them. And I speak to them on more of a daily basis than I do people in real life, which is good. Like I say, good lads. And look, say, and you bang heads with people. Like Will will tell you this actually. When me and Will actually first met, we banged heads a lot. Not in a negative way. It's just because we're so strongly viewed, both of us. But now we're like best buds, man. We're bezies. Will's got too much money though. He's too upper class for us lot. I've been buying a bit of Meta. Now, I've seen about Meta, actually. I haven't been looking at it. I see a few people talking about it. I've been thinking about getting some Meta glasses myself, if I'm honest. I ain't going to lie. I'm going to be part of that cool gang like everybody else. But Meta has been nuts. So we dropped from, what's the 52-week high on Meta? 52-week high is 796, and now and the low is 479. Now we're at 609. So, yeah, it's madness, isn't it? Meta's had some... That's some real big downfall. But when does this bottom? Or where's people's bottom for Meta? It's scary, really, isn't it? Obviously, it's a massive company. It's always going to be, but they've got to pull some out of the bag to get it back up to all-time highs. But again, market has to cool down after a bit, doesn't it? So Sky and Cody are my gambling players. Everything else is drones and space. Can't really go wrong, can you? With drones and space, ISTS, you've got your Ondas, you've got. It's people like these as well. People hate on him, but the CEO is actually a good dude, to be fair. I watched an interview on him not long ago. But when you look at, like, say, the year, they're still up 53% for the year, and people will go, oh my God, look, it was up here. It was 15, 16, 19. Ouch. It's 16, 19, and now it's down to 720, so it's halved in price. But then people will go, oh, this stock don't stop dropping. I see this all, like, obviously, I spend a lot of time. Obviously, you've seen a lot of people coming in and saying that they talk a lot from the Ondas community. Now, I spend a lot of time on here. Look, you'll see it's mainly me. I speak a lot of time with people, spend a lot of time filling in sheets, sending stuff. As you can see, look, it's literally me. What is that there those times for? I don't know what that's there 3 times for. That's crazy. That's criminal, actually. So yeah, when you look through, it's just me all over the place. But try and build a good community, man. Try and help people as much as we can. Jordan, when you got something in common with a group of people who share passion and focus, it goes on way. And it does. And to be honest, we don't care about the monetary side of it, for instance. So I don't care if you're paying for a yearly membership. If you come in there and be a dick, you're gone. You'll have your money back and you're gone. So because we're about building the right attitude of people as well. You're allowed opinions, of course. You're allowed opinions, but you can't just come in and be a dick. Luckily enough, we had about 5 people to that in the last year. So we don't have to worry about that. Yeah, plus 50% a year is very good, to be fair. Yeah, massively. My own growth for a year, as long as I get 10% a year, I'm happy with that. So if I can get myself 50% in a year on a stock, that's all I can. But if you look at Ondas, this is another one of Ondas for the year. I see people complaining about this the other day in the market, and they're saying, all this stock is fall down, it's fell 30%, blah, 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 and that's because you're buying in at 8, 9, 10, etc. DCA, zoom out, For a year, it's up 953%, and people are still going to get mad about it. Are you going to get mad? It's up 953%. Some people just make me laugh. It's criminal. RCAT have been dropping the back. The problem is with RCAT, right, is they're not very diversified, and this is the difference between Ondas and RCAT, because you've also got, is it DPR Outlook? Let's look at this. You've also got Dragonfly. Dragonfly is another one. People didn't want to listen to me about this a couple of months ago, but I did it. Now, I had a conversation with this 12 look with James Acuna. Now, Dragonfly is a $35 million market cap. How on earth do you think that is valued at 12, 13? And people said to me, oh, but Jay, they've got contracts with this person in the army. Did anybody look at, and this is where fine print matters. Me and James Acuna was talking about it on text message, actually, but after we interviewed, he shared my view. He shared his views in 10 minutes with me, and he went, Jay, have you seen the contracts? And I said, yeah. And he sent it me through. The contract was for like 50 grand. So, yes, they got a contract, but it's for 50 grand. What's 50 grand? Like, some of us have got more than that in our portfolios. So it's important you read the small print. Just because they got a government contract, it was for 50 grand, so it was nothing. Now this stock's gone from being hyped up and rushed up to 12, 13, back down to 690 with no actual proper backing to what it is. RCAT have got actually a really solid business model, as much as it hurts me to say that. It's not RCAT's fault. It's their followers. They're very, it's funny, like you get your iPhone, your Samsung, you get your Xbox, your PlayStation, you get RCAT, and you get Ondas. No, it's one of them. But yeah, the CEO's a good bloke, but they're really, really primarily focused on, obviously, army drones. So obviously they haven't got no diversification other than warfare. Whereas Ondas, you've got warfare, you've got infrastructure protection, you've got surveillance, you've got so many fundamentals as to why Ondas is good. Now we're looking at the World Cup for 26. You start looking at stuff like that. Who's going to be good? Are you going to want an army drone, or are you going to want to counter UAS drone? You're going to want to counter UAS drone, aren't you? You ain't going to want to send them an army drone blowing shit up. You want something that's going to catch something safely with a net. So that's where you. So Ondas is good for options trading. So I've sold some puts when it was low. I don't want to read that. You didn't do anything with puts. Don't tell me that stuff. You did nothing but calls. No, but you are right. And like I say, in these stocks, because they're such high beta means volatility. I'm just obviously because I've got some new people here. Because it's such high volatility, you can make money swing trading it. I don't advise it. And I took some money off the table. Off the table at 11. I took a little bit off the table with no intention to buy back my shares cheaper, but it happened. They dropped down. I bought my shares back at a cheaper price, a lot cheaper price. Then obviously I'm happy with my holdings, but then when it was dropping into the low fives, I picked up some more because it's a no-brainer. My average has moved up by like 3 points since I first bought in, but yeah, it's a no-brainer. And Ondas is so good. And to be honest, Eric's an absolute ledge. Speak to him quite frankly, quite a lot, which it still seems surreal to say every time, but Eric's very polite, very informative guy, and he's smart. So nice to have him at the realm. And if you are new here and you are an Ondas investor and you didn't watch all of the interview, this was the book that he recommended to read, which is A Random Walk Down Wall Street. A good book. I read this one straight after because I'm a fanboy of Eric. I'm not really. I just wanted to read it because it's an interesting book, really good book. Olden timey financial history. And that's what he said would benefit a lot of people, to be fair, to know more about financial history. So let's go ahead and look at this. It's interesting on Meta. They're close to April lows and they're all-time highs. So that's their midterm bottom for me. Low to mid 500s, worst case. I see. Like I said, I don't follow Meta enough, to be honest, but they're dropping the bag a lot lately. Ondas has the best liquidity. It's been long haul them for a while. Everything else I have is supply chain, UMAC, Lightpath, and Coping. To be fair, I had a look into Coping a lot before their earnings and and obviously I thought Coping was a really good investment, and see, I was right with that then. So I did think when it was up here that it would drop a lot more further down before it rose up from the research that I did, and I did share this in the Discord as well. Looks like I was right because it's reached down, but Coping is a very good stock. The problem is with Coping is it runs on very small margins. So obviously if they have any delays or anything happens, they're going to struggle that way. Centrix is a really big one to watch for Ondas's future growth. They're huge. They've got their foot in so many doors. Yeah, George, very excited for us moving into the mine clearing space too. Ondas is just going everywhere. I think the only thing that they're not doing yet is underwater, basically, which is probably a market they'll go into next. James also said that was a massive thing for them to get into. So But when you sell puts, that's bullish. You get yeah, I know. That's what I mean. But I said puts, and that's what I was on about. Now, but yeah, like I say, I think again options on Ondas. Obviously, I know a lot of you mean M5 and that speak a lot about this and stuff as well. And obviously, we think our cat could go further down. If guys none of you are sure, obviously sure about it, just done a few videos. Let me show you one here. Um, where are we? So we've just done a lot of videos on Ondas. So you've got the Q3 earnings, we've got the interview with James Easy, got the preview for the earnings, we've got the interview with James Acuna, we got the interview with Eric. That was a massive one. That's done so well, that as well, by the way. So very happy with stuff like that. It's mad that you get the actual opportunities to do this and the people. Would you buy our cat? I don't know. Like, this is what I mean. People always say, "Oh, if you're against them," I don't see Arcat as a direct competitor to Ondas at all. And actually, do you know what? When I spoke to Eric about it, Eric was saying the good things about him. And he wants, like, say, he's friends with everybody in this sector or wants to be, etc. So they don't see each other as direct competitors. I mean, they're not direct competitors. I don't know where the whole Arcat Ondas direct competitor is. Do I think Arcat's a good business model? From what I looked into, yes, but they definitely need to improve on their financials of what they're doing, getting more contracts, etc. Because they have got green UAS on one of their products, I believe. I haven't looked too much into it. So RCAP maybe in the future, but I'd rather buy Ondas. I think Ondas is going to grow. Got my phone up and going on WhatsApp. I'm actually set up yet, but can still remember. Yeah, legend, Bob. Drop me a message when your WhatsApp set back up, man. I'll probably see you tomorrow at work anyway. So Coleman Lights are 2026 players on Dash is right now and all about. Yeah, to be honest, if I'm honest with this comment, I think you're 80% right and 10% wrong. I think you're 100% right if you say Ondas is a 26 player as well. Ondas in 26 is going to be nuts. I don't know if you've watched the Q3 breakdown, but next year they expect to like 4x their revenue. So let's say if we're 4xing where we're at from now, we're like high 20s, medium 20s. And we said 20 by end of year in the Discord. People were saying 40, 50. And I used to think that was really far fetched, but you know what? They're bang on the money because even their investment, this is just talking from revenue from Ondas alone. We're not even talking about their arms. So let's talk about the arms of the business. They all can make silly money as well. Yeah, it's a big chance to earn a lot of money and a lot of revenue. So we can be talking a lot high 20s, high 30s. But me personally, 20 by end of year, I reckon, for Ondas. So we had options on the ISO of doing leaps options. Yeah. So anybody that don't know a leap option, it's longer than a year. So obviously it's not buying options in the future. You've got short-term options, you've got long options. Again, I'm not a professional on options or anything. So I think options in the ISO would be dangerous for a lot of people, but I do think it'd be great. You can make a killing on options, but you can also go really wrong. And obviously, I don't know if mine will load up. So always transparent when we look at this type of stuff. So I had some mess around on mine, if I'm honest. So I had some 9.5 Ondas calls. Mine are just messing about, learning the thing. 28th expiry date. Obviously, they've lost all their value because we're not nowhere near 9.5. Still got a chance to get there. And we had some high of $8 calls, I think, and this obviously dropped loads as well because of market sentiment. So it happens, man. Got to be transparent with it though. So we put some money in both of them, but we made the wrong calls. So that's why I think if people had the chance to do all the options in the ISO, it'd be a bit of a thingy. Driscoll called Ukraine is Silicon Valley defense. Yeah, James Acuna says the same thing, if I'm honest. Obviously, I know. Oh, there we go. Yeah, so I think a lot of people say the same. There's a lot of potential in Ukraine that people don't see. Obviously, again, actually, sorry, one of the things that you should use for DD as well, which I said earlier, LinkedIn, man. LinkedIn is a secret tool. I know Brad uses it a lot for his on that stuff, but I've been obviously used LinkedIn for work for years. But when you start following people on there, you start finding stuff you don't see on social media. So you start following a couple of those Ukraine video pages, and yeah, like George says, Ukraine has been, to be fair, won't change plans. No, I don't expect it to. I think it's absolutely a massive market there in Ukraine. But obviously, we're good, we're bad. There's a lot happening there because a lot of what's happening there, but we won't go into political type stuff. We don't do that. But yeah, so it's interesting to see what comes out over the next couple of years from the companies of likes of these. But that's where people get mistaken with Ondas as well. They think obviously it relies on war, Department of Defense contracts, etc. No, it don't, because their drones can be used for infrastructure. Let's say you've got data centers being built left, right, and center. Well, what's protecting it? What's keeping an eye on it? What's stopping a drone just flying in, damaging it? What's paroling the oh, spot on a better line setting down a little. Yeah, so like I say, what's protecting the data centers? What's protecting this thing? So you're going to want these drones surveilling the areas, doing stuff like that. Don't have to be war to be able to find a use purpose for drones. Look at Dubai. So if you're in Ondas, you'll know that Dubai have a lot. They earn a lot of money out of Dubai, and Dubai use these to just for surveillance. They're quick deployments. They change their own batteries. They change their own optics. You know what I mean, that's why they cost a lot of money, but it is what it is. But then obviously you've got the defense side as well. So you've got the wasps. So obviously a Perio. I think it's a Perio that did the wasps. Perio motion. Is it a Perio that did the wasps, or is it what Perio did? Oh no, Perio did the ground stuff. So they do the four-legged dog and stuff like that. Who was it who did the wasp? Oh no, wasp drones. I'm placing this on the wasp drones. Who was it? What company did they get involved in with that? Oh, Rift. That's it. Rift. Oh no, so we go. Rift. So when you start looking about, look, you see the all purple. I do my DD. I'm here. So this is your wasp drone. Now, obviously, these are the ones that are. Now, this is the key. It says it here somewhere. Where does it say? It says something about being cheap. There we go. Cheap to use, cheap to lose. That's essential to DD contract, to Department of Defense contracts, etc. You ain't going to be wanting to fly a £200,000 drone in something. And this is a problem at the moment with drones. They're flying £250,000 to £1 million missiles at drones. That's crazy. That's not feasible. So you need the cheap to use, cheap to lose. You need the cheap drones that are effective to get the mission done. That's what's important. They use drones to fly down oil and gas pipelines to check. Yeah, exactly. There's so much use cases. What people don't understand as well, there's a massive one, is they use them to clean solar panels. When you've got mass solar panels, they use them to go across and clean them more. And that's Ondas as well. Ondas have got contracts with people to do that. They clean all the solar panels. You can do it to farm and agriculture. You can do it to surveillance oil rigs, networking systems. There's so much use case for it. Yeah, we've done her. Got it in the end. Thanks, mate. So this is a problem. I said this to Eric when we was conversating not long ago. There's so much to talk about all the time. The problem is there's too much going on. So cheap to produce, highly modular payload capacity. Yeah, exactly. These drones are pretty cool. I mean, there is videos. I'm not going to show them on the stream. I don't know if it's allowed on YouTube, but there's actually, because it's only in a testing center anyway. But they're in a test center and they're showing them, and they're very effective. They're very good drones. And obviously, this is a Norwegian-based company with NDAA compliance in the US, which makes it green ready and blue ready, so straight ready for being used. So yeah, that was quite a successful breakdown of anything. Is there any other stocks anyone wants to look at? Anything else wants to touch on or anything? I mean, we're an hour and a half in deep now, so fair play. I appreciate all the support. And like I say, if you haven't already, if everyone can just drop a like on the stream, etc., it goes a long way. So I do appreciate it. It does mean a lot as well. So cheap to produce. Yeah, that was that. So I think we've touched on everything now. And like I say, I hope people found the DD breakdown useful. I hope people took something from that. Quite happy with what we covered on here. Quite happy with that. Will, George, I appreciate you locking and helping. Again, Will, buying any more Nebius? Will, I did. You obviously didn't watch my video, did you? Or did you? No, you did, because you commented on it. Yeah, so obviously, Ondas, Nebius. Yeah, we'll touch on this now real quick. Nebius is a. We can talk forever if people give me stuff to talk about. Never. So let's have the conversation about Nebius and CoreWeave. Let's have that conversation. So Nebius, people again have been buying in this high. Now I bought this at 20, I bought this at 50, I bought this at 70, I bought this at 90, I bought this at 100, I bought this at 105. Nebius is the future of data centers, in my opinion. To 200 stock by year end next year. I've been buying more. I'll probably top out at 300. I think I'll be happy. Won't be buying any more in April unless I relinquish some positions, but I'll be buying some more in April, I think, if I get that, or if I get any more cash. But Nebius is huge. CoreWeave and stuff like that. obviously pulled down the market a little bit. So, I mean, that's 78 now. Where is it at? I mean, look at that. Core we've seen highs of 187 in June, and it's lost 100 of its value as well. But core we've obviously had delays on data centers, etc. So, I'm buying some Cloudflare and some other cyber tech. Cloudflare is a massive one as well. Can't really. Oh, yeah, New York Stock Exchange. Been absolutely flying this year, 136%, even in the last 3 months. I mean, last 3 months have been quite stale. Obviously, seen highs of 254, but obviously the market's in a whole pullback. The thing is, people don't understand that the China deals, etc., aren't actually done yet. So I will show you exactly what I mean. So there is still more to happen. So let's share this. So we've got Basically, I'm confident China will honour agreements on rare earths. So obviously, there isn't an actual deal done yet, properly deal done anyway. They hope to complete China magnet deal by Thanksgiving. So that's 2 weeks from not next Thursday, Thursday after. And Bessett said here, US Treasury Secretary Scott Bessett said that the Trump administration aims to complete its trade agreement with China by Thanksgiving. Speaking to Fox News, he dismissed a Wall Street Journal report as inaccurate. Nothing, the deal is still unfinished. Noting the deal is still unfinished, Bessett added he is confident China will honour the agreement after the upcoming meeting between President Trump and Xi, and emphasised that Washington has many levers if Beijing does not comply. Always a threat to the businesses, and there's always something. But yeah, so still more to go on that front. What do you think of VC drone competition? Like now, us getting the FPV, PBS contract. So again, with VC drone competition, that's what Ondas Capital's about. There's going to be a lot of stuff that gets mounted up with that, and the logs of order Adriel. So Andriel, sorry. I think obviously a lot of the newer VC type of stuff is what Ondas Capital pick up. I'm not worried about any of that stuff. I think Ondas are really positioned. It's not easy to get green UAS and those type of things. So I think Ondas are positioned in a really, really good spot, and they're going to be massive going forward. They already are. They're already killing it. They've got everything in board. The staff's in board. They've got everything right. So we've got a vote on the what's the date now? We've got a vote on the 18th. I think it closes or something. I think it might even be 17th, so it might be tomorrow. So there is a vote that needs to be closed, obviously, to extend the bank of total outstanding shares if need be. Obviously, I think that's going to go through a lot of people. People voted for it. So, yeah, I'm confident with Ondas for the future. I think it'll do very well. So, yeah, we're going to call it there. So, we're going to call it at 128. So, obviously, I appreciate everybody tuning in. Thank you very much for everybody that took their time to come and watch. I appreciate it. I hope you all enjoy the rest of your evening, and we'll be here again next week. So, yeah. Thank you very much, guys, and enjoy the rest of your night. See you later.